Welcome everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates. Hey, welcome back everyone. My subscribers know where I stand, but it's time to review what's behind my trades. This is not financial advice. I am not a financial advisor. I will never tell you to buy, sell, or hold any securities or cryptocurrencies. This is for entertainment purposes only. Having said that, I am long AMC. I'm averaging down, and I'm long the 7 and 8 strike calls expiring December 1st for now. If I lose, I lose. I will never sell my common shares until the shorts cover in earnest. I believe the shorts have not covered yet. I believe there are billions of synthetic shares that need to be accounted for and reconciled. I believe the apes have bought the float 2 to 3 times over, if not more. I reject the notion that we own 90% of the float a year and a half ago and only own 90% now. I believe the shorts will never cover unless they're forced to, mainly because it may represent a catastrophic event, not only for predatory short hedge funds, but may also impact prime brokers, market makers, and even clearing firms. I believe the regulators are aware of this dilemma and are assisting and coordinating with the primes to avoid a Lehman Brothers event. At this time, I reject that any future planned dividend, new SEC rule or enforcement, or positive fundamental development in AMC will force the shorts to cover. I believe now, more than ever, it will be only a black or white swan event that will produce a short covering event in the stock, specifically a surprise event that adversely affects the leverage chain of the predatory short hedge funds, creating a rift between the prime brokers that enable them, forcing them to a decision due to illiquidity. That's it, in my opinion. The only path out of this trade, and I'm going to prove it to you now. Look at your screen. It's titled Prime Book, Cumulative U.S. Short Flow, Positive Value equals Short Increasing. Okay? Hedge fund U.S. single stock short flows increasing for a record 14 consecutive weeks, according to Goldman Sachs. A record 14 consecutive weeks. I want you to know AMC is in a far better position right now than our enemies by a country mile. We are not leveraged 40 to 1. We are not facing pushback from regulators, the government, foreign governments about our extreme leverage positions. We don't have to face the responsibility of billions of synthetic shares if they exist. Buckle up. It's only 12 days until Beyonce drops, and I want to prepare you for these next 2 weeks. This is the most important part of the recovery stage for AMC, in my opinion, and I'm going to prove it to you in this video. Let's run through the coming economic data that has the potential to move the markets, and I'm covering that because the hedgies need to be worried about these events far more than we do. Monday, November 20th, 10 a.m. Eastern Time, U.S. leading economic indicators. Tuesday, 10 a.m., existing home sales. 2 p.m., minutes of the Fed meeting. Wednesday, 8:30 a.m., initial jobless claims. 10 a.m., consumer sentiment. Thursday is Thanksgiving. This is a holiday weekend. I've read reports that people plan to go to the theaters over 40% more than they did last year. This could be very important for us. Friday the 24th, 9:45 a.m., S&P Flash U.S. Services and Manufacturing PMI. That's also Black Friday. Monday the 27th, 10 a.m., new home sales. Tuesday, 9 a.m., Case-Shiller Home Price Index, and at 10, consumer confidence. Wednesday, 8:30 a.m., GDP, and then advanced retail and wholesale inventories. Thursday, 8:30 a.m., initial jobless claims, personal income and spending, the whole PCE core index data group, and then at 10 a.m. pending home sales. That Thursday is a monster for the hedgies to face. Any of these economic indicators coming in cool can certainly spark rallies against people that are deeply, deeply short the market. But now let me add this to the calendar. While I believe the hedgies are shitting in their pants, and I'm going to prove it to you, we have some wonderful, newsworthy releases for this time window of 12 days. And if you add a swan event to that equation, that could be devastating to the hedgies. On Wednesday, the 22nd, we have Napoleon and Disney's Wish dropping ahead of the holiday weekend. I'm just hoping Wish is not another woke piece of shit bomb. Then on Friday, December 1st, we have Godzilla -1 and the event we've all been waiting for, the Beyonce movie drop. Remember, I believe since Morgan Stanley runs our board, and while Citi remains our chief investment banker and Adam continues to follow their advice to the letter, there is no amount of good fundamental news or press release that would benefit the stock. Get it through your heads. Our senior management team will do absolutely nothing to injure the interests of Wall Street deliberately. And Adam has proven that time and time again. But we are now approaching an important threshold that no amount of Adam selling our stock will be able to save our enemies if a white or black swan event occurs. Okay, now let's get down to business. This headline appeared on Saturday, and it's from our chief investment banker, Citi. The guys that have a sell recommendation on our stock and have slashed their price target every time they need the stock to cool. The same bank that's short, AMC. Sounds just like Credit Suisse, doesn't it? These are the guys that designed APE. You remember the pounce? Today we pounce. They designed the reverse split, the conversion, all of it. That's Citi. Adam and Citi seem to take turns skunking the stock price. Adam killed the last rally before it even got started by announcing he plans to sell shares before the market opened, but after the greatest third quarter and earnings call in the company's history. He could have mentioned it during the call, but he didn't, because it wouldn't have had the same impact. Do you remember the original bet, guys? It came down to AMC is going bankrupt. We said it isn't, it didn't, we didn't get paid. Then they changed the bet to this company will never post a profit again. Remember that? Well, we said it will, and it did. We never got paid. Then they changed the bet to we will never do better than 2019, pre-pandemic. Well, we just had the best quarter in our 103-year history, and that includes 2019. And again, senior management coordinated with Wall Street, so we didn't get paid. Now let's see what Citi is up to this weekend with this article titled, Sell Rating Maintained on Overvalued AMC Entertainment Despite Upward Target Price Revision. Okay, Citi analyst Jason Bazinet, that's him on the right, has maintained their bearish stance on AMC stock, giving a sell rating on November 9th. Okay, check this out, guys. 10 days go by, and this analyst has to open his mouth again. Never in my life have I seen an analyst revisit his recommendations more than this goof. Jason Bazinet has given his sell rating on AMC Entertainment stock due to a range of factors. Bazinet has updated his model to account for AMC's third quarter results and future predictions. Despite reporting above consensus revenue again and again, and adjusted EBITDA for the third quarter of 2023, the analyst maintains a conservative view, is that what you call it, on the company's valuation. Bazinet's target price has been revised upwards this time from $4.75 to $5.75, a couple bucks below what it's trading now. This adjustment is based on the assumption that AMC will service part of its debt by issuing equity at the current share price. Well, Adam loves to sell when it's way down. We don't like to build the company up and build the stock up and sell high. We love to sell APE at like 65 cents. We love to sell, AMC at, 70 cents on a pre-split basis. That's Adam's goal here, and I still don't know why. Furthermore, He has valued AMC at approximately 7.5 times its 2024 estimated value to EBITDA, which aligns with the company's 3-year average multiple. Go back as far as you can, Jason, to keep it down before the pandemic. Despite this slight increase in the target price, Bazinet still rates AMC as a sell, believing that the company's shares are currently overvalued. See, he needs to do this in front of all the news that's coming up. In another report released on November 9th, Macquarie also maintained a sell rating on the stock with a $9 price target. AMC's price has also changed dramatically for the past 6 months, from $5.10 to $7.43, which is a 45.69% increase. Okay, so you guys had a sell recommendation before it increased 46%. Is that what you're saying? I don't know what these guys are talking about here. I've got AMC down 81% over the past 6 months, but I think you see my point. These people are coordinating with the investment banking side of the firm and AMC to control the stock. That's just my opinion. They know we just came off an amazing quarter. They had Adam wreck that opportunity, and they know we have an impressive lineup of potential good news going into December, and they need to keep the stock under control. Adam needs to string us along, and Citi needs to hold this price down. Okay? These people are bought and paid for, and it's obvious now. Now, I've already said the prime brokers like Citi, they're in a world of shit due to a number of factors like commercial real estate, securities sold yet not purchased, unrealized bond losses on their balance sheet, and they're short to their eyeballs, but this market just keeps rallying in their face. So let's see what the hedgies are doing to help out. Remember, the hedgies are the best customers of the primes. This was from the 15th. Short sellers help lead surge in SEC whistleblower tips. Get your mind around this. In addition to publishing scathing reports about companies they suspect of wrongdoing, short sellers are also taking their findings to the SEC whistleblower program. After publishing reports, short sellers like Carson Block of Muddy Waters Research, Kyle Bass and Nate Anderson of Hindenburg Research, remember them? Often share their findings with regulators, a new report from Bloomberg says. Should the SEC conduct an investigation and impose a fine, a short seller could be eligible to receive a maximum of 30% of the collected amount. This potential reward is in addition to any gains they may realize from their bet on the stock's downturn. Okay, let's review. Short sellers are short a bunch of stocks. They won't crash. They're putting out hit pieces through their outlets. That's not working. So now they're going to the SEC, okay, and reporting them, hoping they get a commission and that their report tanks the stock should the SEC investigate. I don't know. That sounds pretty desperate to me. What about you? And what about this headline from Reuters? Short seller Jim Chanos, never been a big fan of AMC, to close hedge funds, according to the Wall Street Journal. From Friday night, after nearly 4 decades, Jim Chanos is shutting down hedge funds he manages that wager against companies he believes are overpriced or fraudulent, the Wall Street Journal reported on Friday. His firm, Chanos & Company, manages less than $200 million today, down from the $6 billion in 2008, the report said. Chanos expects to return most of his investors' cash by December 31st, it said, quote, "It's no secret that the long-short equity business model has come under pressure, and interest in fundamental stock pickers has waned," Chanos wrote in a letter sent to investors and obtained by Bloomberg News. Don't let the door hit you in the ass on your way out. Now, guys, I said I'm going to prove to you the primes and hedgies are in deep, deep shit, and Goldman is no exception. Do I have to remind you Goldman is short AMC and spoofs the shit out of our stock on a daily basis? But you have to read carefully. One article is the narrative they want you to believe and follow. The other article exposes what's really going on behind the scenes. Pay attention. Goldman's hedge fund honcho reaffirms The path to year-end is higher, but then he continues, stick with length in the highest quality parts of the market while resisting the temptation to chase a rally in the junk. Okay, so what is Goldman saying? We think there's going to be a rally. We don't want one, but you better stick with, the Magnificent Seven, only quality. Don't chase this junk that we're short. Now let's read the other article that exposes the truth from only 2 days earlier. Russell 2000 call volumes explode to all-time high in short crushing rip fest. Realizing they are far too short the Russell to cover cash single names and go long, hedge funds did the next best thing they could, bought a shitload of IWM calls and then bought even more calls. Can you see it now? Now, guys, this is from Saturday night. This is turning into a nightmare for the primes and the predatory short hedge funds. We just saw the biggest weekly stock buyback spree in history. Quote, largest weekly buyback in our data history. This is since 2010. Corporate client buybacks accelerated last week and are tracking above seasonal levels for the first time since May. Are you sure you want to root for a crash, or do you want to root for more rallies that are killing Wall Street? If you listen carefully, you could actually hear the pain of the primes and the hedge funds in these headlines. 3 charts we are watching. Largest buying on record. CTAs have bought nearly $70 billion of U.S. equities over the past 10 days. And another one, the memo on hard landing hasn't reached the stock market. It's unlikely that the Fed will be able to land the economy with a gentle touchdown. You see, this thing just keeps rallying and it's killing them. But now add all the things on their balance sheet, the unrealized losses. Now add all the synthetics the hedge funds have exposed them to. Now add all the shares sold short yet not purchased. This is getting out of control for them. Now let's add this slide to the equation. This is just from Friday. Big banks see $63 billion deposit outflows last week. Loan volumes continue to contract. Despite another rise in banks' usage of the Fed's expensive BTFP bailout facility to a new record high, and regulators set to force banks to the Fed instead of the FLHB for cheap funds, regional bank shares surged this week as yields tumbled. Guys, it's the perfect storm. Let's build on that last slide with this headline. Money market fund inflows continue as Fed's bank bailout fund hits another new high. This is from Thursday. Money market funds saw inflows for the 4th straight week, the biggest outflow since Lehman, adding $21.9 billion to reach a new record high of $5.73 trillion with a T. And is Wall Street worried about a recession? We're not. Futures treasuries rise amid growing rate cut bets as oil bear market signals recession. This is from Friday. Quote, eventually, we will get rate cuts, but as we see company earnings weakening and consumers cutting back on spending, that's initially not going to be good for markets. Well, I've got something to counter that for the theater business. Movies really are recession-proof. In the past, theaters have been where Americans went for entertainment when the economy shrank. During the last 8 recessions, box office sales increased 6 times over. The 2020 COVID-19 induced recession was the outlier. Movie theaters had to be empty to stop the spread of the airborne disease. So guys, guess what? Recessions are good for the theater business. Uncle Frank is always looking for black swan events, but I have implored my listeners to be careful what you wish for. White swans can inflict more damage to Wall Street huge short bets than you might imagine. For example, maybe this will be a white swan for the markets, but a black swan for the shorts. Israel and Hamas reached tentative 5-day pause to free hostages. From the article, Israel, Hamas, and the United States are reportedly close to announcing an agreement to pause ongoing hostilities in order to free dozens of women and children being held hostage in Gaza. According to the Washington Post, the release could begin within the next several days and would mark the first sustained pause in the conflict. To tell you the truth, guys, I'm looking for an event like the one that took out 167-year-old bank Credit Suisse and their client Archegos due to a liquidity crisis in the leverage chain. In my defense, there sure are a lot of hedge funds that are no longer around, so I don't care what other people think. Like Roaring Kitty said, I like the stock. We may have a senior management team that's too sympathetic towards Wall Street. We may also have a lot of debt, but we are the largest exhibitor of movies in the world, and we soon may be one of the largest distributors too. The pandemic and the apes forced the company to modify its business model, and now there's no other company like it in the world, in my opinion. If you want to bring content to an indoor audience, you have no choice but to speak with the largest operation on the planet, and that's AMC. We now have a retail popcorn business in the largest retailer in the world, Walmart, and we're expanding into 2 other food chains as we speak. We have a thriving movie merchandise business and a new branded credit card revenue stream. I believe the apes still own the float, and AMC Project Popcorn may reveal they own it multiple times over. I believe the hedge funds are closer to going bankrupt than we are by a huge margin. So if you don't like the company or the stock's chances, move on. That's not investment advice, just me saying I don't give a shit what you think about my investment decisions. I like the stock. And I'm going to close with a shout out to all my Black Swan gold bugs. I still love you even though I disagree sometimes. 100 years ago this week, German hyperinflation ended. On November 15, 2023, decisive steps were taken to end the nightmare of hyperinflation in the Weimar Republic. Peter Schiff, investor optimism is at odds with reality. Well, they've been saying that for 30 years. The gold guys will ultimately be right. If the Fed starts cutting rates, it's because the economy is very weak. And potentially we have a banking crisis, a financial crisis, or something breaks. I would agree, Peter. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.